Six of the biggest companies on Earth just borrowed $244 billion in a single 6 months. Not to build a factory, not because business is booming. They borrowed it because, on paper, they are now losing money. The most valuable corporations in human history. The ones sitting inside almost every index fund and retirement account in this country. Quietly cash flow negative. And almost nobody cheering the stock price has noticed. George Gammon noticed. This week he put out a video. 178,000 people have watched it, laying out exactly how the AI boom ends. And here's the thing, he's right. He walks it all the way down, step by step, to the last domino. He even names the mechanism most people in finance won't say out loud. And then, right at the edge of the only conclusion that survives it, he stops. He points you toward his investing group instead. I'm going to finish the sentence he started, because one step past where Gammon stopped, the whole thing lands on a single asset. The one thing in his entire story they cannot print more of. It lands on Bitcoin. Stay with me because how he backs into it is the tell. I built a live dashboard that puts this exact fight side by side. The money printing on one side, Bitcoin on the other, updated every day. I'll tell you where at the end. For now, just keep one word in your head the whole way through. Issuer. Here's his argument, stripped down. Companies like Amazon, Google, Meta, Microsoft, the hyperscalers. Everyone assumes they're printing money. For years they were. But the free cash flow Gammon put on screen has flipped. Steeply negative. They are now spending far more than they take in, all of it chasing AI. And his line for it is perfect. There is infinite demand for selling $20 bills for 10 bucks. Of course everyone loves your product if you sell it at a loss. That's not a business, that's a countdown. So how do you keep buying $20 bills to sell for 10? You borrow. That's the 244 billion. Six companies, first half of this year, in the bond market. Nvidia alone borrowed $25 billion in June. The most valuable company on the planet, the poster child of the whole boom, had to go get a loan. Wall Street is on pace to swallow 400 billion of this debt in a single year, and Goldman's own traders were reportedly calling it carnage. Now here's why that reaches you, not some trader. There's only so much money in the world to lend. Flood any market with that much new debt, and the price of borrowing climbs, for everybody. Your mortgage, your car loan, the interest on the national debt that comes out of your taxes. The AI boom is quietly bidding up the cost of money in your life to pay for servers you will never touch. Then Gammon does something most macro guys won't. He explains why this doesn't fix itself. Normally, technology gets cheaper every year. The phone in your pocket, the flat screen on your wall, all of it falls in price over time. Technology is deflationary. That's the gift. It's supposed to make your life cost less. But AI compute breaks the pattern. A model twice as smart doesn't cost twice as much to run. It costs something like 10 times as much. So the bill doesn't shrink the way tech always has. It explodes. Gammon flags a high-end estimate. North of $10 trillion these companies may have to spend in the years ahead. 10 trillion. Chasing a product most of them still can't turn a profit on. So what happens when a giant runs out of money but can't stop spending? He walked the options and landed on the one he called most likely. And I'd bet you already feel it coming. His exact words. Your drunk, insolvent Uncle Sam. The government steps in. A bailout. The companies wire themselves so deep into Washington, national security, can't let China win, that they become too big to fail before they ever actually fail. That's where Gammon lands. Bailout. And then he sends you to his community. But bailout is not the end of the sentence, it's the middle. Because a government already running trillion-dollar deficits does not have $10 trillion sitting in a drawer. So where does a rescue that size actually come from? That question right there is the whole reason this channel exists. If you want to watch it happen in real time, the deficit, the money supply, and Bitcoin, measured against both, that's the free dashboard I mentioned at timtalksfinance.com. Live numbers are free. The deeper weekly breakdown is on the members side. Links in the description. Okay, where the money comes from. It comes from the printer. It always comes from the printer. When the government has to conjure trillions it doesn't have, it doesn't pass you a collection plate. It creates new dollars. And every new dollar makes the ones already in your savings account worth a little less. Now snap the two halves together. This is the part Gammon set up and didn't close. AI is a machine that makes things cheaper. The printer is a machine that makes things look more expensive. And they are about to run the printer at full blast to rescue the AI machine. So the price relief that new technology was supposed to hand you, you never see it. It gets swallowed by the printing done to save the companies building the technology. That gap between the cheaper life you were owed and the pricier one you actually pay for, that gap is the theft. You get taxed twice. Once when the boom bids up the cost of money in your life. Again when the bust gets printed away and drains your purchasing power to do it. And the bubble they're rescuing is already sitting inside your retirement savings. You are paying to bail out a bet you didn't know you'd made. So you do the natural thing. You look for the exit. And this is where it gets bleak, because every exit they hand you has the same flaw. Move into bonds? Those are the 244 billion in new IOs, an issuer flooding the market with more of them every month. Stay in the stocks? Gammon's own next step is that these companies, to survive, print new shares. Dilution. More slices cut from the same pie until yours is worth less. Sit in cash? That's the dollar. And the issuer is the Federal Reserve, which has already shown you it will make trillions more the second the system demands it. Even gold, the classic escape, has miners pulling more of it out of the ground every year. See the pattern? Every life raft they offer you has a man attached who can make more of it. Every single one has an issuer, and an issuer is just a person who can dilute you to save someone else. There is exactly one exception: Bitcoin. 21 million coins. That is the entire supply, fixed in the code, forever. There is no CEO who can print more Bitcoin to cover a bond payment. There is no Federal Reserve chair who can conjure another few million Bitcoin to bail out a data center. There is no Uncle Sam who can vote a fresh batch of Bitcoin into existence at 3 in the morning. No servers to raid, just a protocol running on hundreds of thousands of machines that all enforce the one rule that has never once changed. 21 million. That is the exact thing Gammon walked you right up to and didn't name. Look at his whole video again. It is a story about issuers, companies who can issue debt, companies who can issue shares, a government that can issue dollars. Every one of them racing to make more of something to survive the night. Bitcoin is the only asset in that entire story with no issuer at all. In a world about to print trillions to rescue a bubble, the one thing that cannot be printed isn't a trade, it's the exit. That's why the truth keeps landing here. Not because Bitcoin is exciting, but because it's the only line on the board they can't move. Now, am I telling you the government bails out AI next quarter? No. And Gammon said the right thing himself. There are no certainties, only probabilities. Maybe they let some of these companies fail. Maybe energy limits cap the whole thing first. Nobody knows the timing. But you don't need the timing. You need the direction. And the direction of a debt-based system that slams into a bill it cannot pay has been the same for 100 years. They print. Every time. The only question that has ever mattered is whether you're holding something they can't print when they do. So here's the honest math. Then you decide. On one side, every asset with an issuer who can dilute you. Dollars, bonds, shares, all of it. On the other side, one asset, hard capped at 21 million, with no issuer at all. Bitcoin. You don't have to bet the farm. You don't have to buy a thing today. You just have to know which side of that line you're standing on before the printer turns on, not after. Gammon handed you the mechanism. Bitcoin is where it ends. Walk through the door yourself. Before you click to the next video, if this made the picture snap together, don't just sit on it. That live dashboard I mentioned is at timtalksfinance.com. It puts the money printing and Bitcoin side by side so you can watch this play out instead of taking my word for it. Core numbers are free. 2 minutes. Then make your own call. Because there are no certainties, only probabilities, and exactly one asset with no issuer.